The best of Money Matters. The Big Story.
Welcome to The Big Story. I'm Hongbin Jeong. Big changes are coming to Singapore's long-term care insurance scheme. From 2026, CareShield Life will offer higher monthly cash payouts to support residents living with severe disabilities as the cost of long-term care continues to climb. The Ministry of Health says the payout growth rate will be doubled, moving from 2% to 4% a year until 2030. But of course, premiums will go up, though the government has pledged $570 million in support over 5 years, assuring that no one will lose coverage. CareShield Life, launched in 2020, is mandatory for citizens and permanent residents born in 1980 or later. Will these changes really go far enough in meeting Singaporeans' long-term care needs? And what might this mean for families planning ahead? Well, joining us today to share more is Alex Lee, president of Singapore Actuarial Society. Hi, Alex. Welcome to the show.
Hello.
Thank you so much for joining us. Well, Alex, from 2026, CareShield Life payouts will grow at 4% annually instead of 2%. Now, on paper, this looks like a significant enhancement. But given the rising cost of nursing homes, home-based care, etc., how much difference will this really make when you look at the actual expenses of long-term care?
Well, from the start, CareShield Life is designed to help defray part of the long-term care cost. It was not meant to cover a very large part of that cost because the biting constraint is premium affordability. This was the case when CareShield Life first started in 2020. And before this latest round of changes, CareShield Life Council has also held many focus groups to hear the views of the public. And it was reaffirmed that between higher level of coverage, wider coverage scope, and premium affordability came up as the top concern. So when it comes to benefit enhancement, increase of payout growth rate from 2% to 4% per annum is presumably what we could afford given the premium affordability constraint. At least this change helped to ensure that payout tracks closely to the long-term care cost inflation.
Well, if people expect more comprehensive coverage from CareShield Life, it would mean a higher premium. So do you think the public is ready to accept that trade-off?
So based on the focus group discussion, I think the answer seems to be no. So for example, CareShield Life Council did consider relaxing the claims criteria and start paying out claims when someone cannot do 2 out of 6 activities of daily living, down from the current 3 out of 6. And MOH found that it would cause the premium to double. And that's why the idea was dropped. So I think affordability is a real concern.
Right. And on top of this, the government has announced an additional $570 million in premium support to help households cope with higher premiums. But how significant is this additional support in the long run, Alex? How far can it stretch?
In fact, it's not meant for the long. So to be clear, it's not the only premium support that the government is providing. So the change in benefits from increasing at 2% per annum to 4% per annum, the CareShield Life premium will see a one-off jump of 35% on average. And not all households will have budgeted for such a large jump. So to cushion this impact, the $570 million premium support that you have just mentioned will only offset some of the premium payable in the next 5 years. People have time to eat into the higher rates and replan their finances accordingly. And then over and above the $570 million, there's also the additional premium support, and that will continue to be available to people with per capita of $3,000 or less. And at some level, households are also eligible for additional direct subsidies to the law, such as the home caregiving grants and nursing home subsidies.
Okay. The Ministry of Health's own illustrations show that a nursing home bill after subsidies could still leave the patient paying $1,200 monthly. And CareShield Life might only cover half that amount. So what does this mean for a middle-class family in Singapore, Alex? Will many still find themselves financially stretched despite being covered?
Well, CareShield Life Benefits is calibrated based on the premiums that most people in Singapore can afford, including those that are in the lower income bracket. So understandably, the payout may feel low to a middle-income family. For those who are concerned about the adequacy of their long-term care coverage, they may consider buying CareShield Life supplements from one of the obvious private insurers. And they can have a choice of benefits whether they want a higher payout and or payout to start, let's say, not from 3 activities of daily living, or maybe start from 2, start earlier.
Okay. I mean, CareShield Life subsidies are extended to households with, property annual values up to $31,000. But other long-term care schemes like the Home Caregiving Grant have a tighter cutoff at $21,000. Now, this can result in families qualifying for one form of help but not another. So would aligning these benchmarks make the support system fairer and more coherent then? I mean, how might it change the way families access care?
Well, as far as coherence is concerned, yes, alignment definitely would help. But quite likely what goes behind the scene is that for each scheme, it has its own demand on the national budget. So let's say if MOH were to tighten the CareShield Life subsidy cut-off towards the level for the home caregiving grants, fewer people will be eligible. But for those who are eligible, they will get more subsidy. So there will always be winners and losers when these benchmarks move, and there are bound to be someone who say that the change is unfair. So as the subsidies like home caregiving grants can offset a bigger share of the long-term care costs, it might be such grants such direct subsidies at the care cost rather than the CareShield Life subsidy that are driving the care consumption behavior.
And like you've mentioned before, I mean, some experts are echoing the same, that CareShield Life was never designed to cover the entire cost of long-term care, only to serve as a form of basic financial support. So how important is it to, reset public expectations about what the scheme is and is not designed to do?
Well, I don't think that public expectation is currently misplaced in the first place because CareShield Life was a successor of ElderShield, right, which started with a $300 payout 20 years ago, right? Since that time, the low payout has always been complained from the public. So I think that idea of how much ElderShield then and now CareShield Life can really do should have sunk in by now.
Okay, so what kinds of, care-related costs does it not adequately cover then? And what are some of the biggest gaps you see when it comes to long-term care financing here in Singapore?
Well, I think there are many support targeted at the cost incurred by the patient. But as we encourage more care to be done at home, support to the caregivers could be an area to look at, from their loss of income to giving caregivers mental health support and things like that.
Okay, and should CareShield Life be integrated more tightly with other LTC subsidies and grants so families can see a clearer picture of their support ecosystem?
Yes, there's certainly scope to integrate more, such as a single assessment for subsidies and also the CareShield Life payout eligibility. And it can be triggered automatically during the disability assessment phase instead of needing someone to make a separate claim or separate application. I do think that the Agency for Integrated Care and the restructured hospitals are already providing such pathway guidance. The gap may be for those who are getting treated in private facilities, and those facilities providers can surely do more to help.
Well, beyond the basic CareShield Life plan, I believe private insurers offer supplementary policies with higher payouts or earlier eligibility. But these add-ons can be expensive, and many families might hesitate to take them up. So in your view, Alex, how should Singaporeans weigh the decision between buying such supplementary insurance versus relying on subsidies?
Well, I think this is not an either-or question because subsidies is a means-tested scheme. So if you're eligible, then you're eligible. But I think if one is eligible for subsidy, the premium for supplementary insurance from the private insurers may actually not be trivial. So one should watch out for their budget and also look at the product disclosure to see how much distribution costs are they paying when they buy a private insurance plan. And also if someone believes that the disability condition is sort of a near certainty that they'll get it in some point, the question is whether is insurance the best solution, or is it better to save up the money and invest in a disciplined manner to manage that cost. And I also think that people need to consider what conditions are they more susceptible to and whether will those conditions result in a dragged out long-term care cost. So, for example, if they have a family history of a stroke and then after a stroke, the person gets bedridden for many years. So I think those would incur a large amount of long-term care costs, whereas if someone is more susceptible to cancer, once someone get into a severe disability due to cancer, chances are they pass on shortly after that. So the long-term care cost may not be as daunting in the case. So everyone has to look at their own circumstances. Yeah.
Definitely. I mean, one issue raised is that most Singaporeans don't really know how much long-term care will cost them, and many also underestimate the likelihood of becoming disabled. So do you think Singapore needs a clearer definition of a so-called basic basket of long-term care services and associated costs?
Yes, it would help. But I think the basket is also highly dependent on the severity of the disability. So having a guide on what basket of services one may need based on different level of severity, that would help. But that will only go so far as describing what services are needed. As far as level of comfort is concerned, it will still depend a lot on personal preference.
Okay. I mean, 1 in 2 Singapore residents is projected to face severe disability at some point in their lives. So is it time to consider expanding CareShield Life's scope and payouts, even if that means premiums increase, as long as they can be funded through MediSave?
Well, so based on the findings of the CareShield Life Council, there's strong pushback on premium affordability. So I guess it will be hard to enhance CareShield Life much further. The supplements is, of course, payable by MediSave, and that would help. But a closer scrutiny is needed on how much of that premium that's paid on the supplement is actually used to pay claims. So let's take Obamacare as an example. It would target 80 to 85% of the premium has to go towards paying claims. The current integrated shield plans that insurers are offering is pretty much doing that also. So I guess the public would expect the same for CareShield Life supplement.
Right. And finally, as Singapore's population ages, what would an ideal version of CareShield Life look like in the next decade, Alex?
I would actually think that the current version is not bad. So one key feature is that whether it's ElderShield or CareShield Life, they are based on payout of a fixed amount per month during someone's disability, as opposed to reimbursing a particular bill, right? I guess that would avoid the buffet syndrome that we're currently seeing in the MediShield and Integrated Shield Plan fronts, right? And that would, by keeping the design as it currently is, I think it will help to slow down the long-term care cost inflation a fair bit. Yeah.
All right. Some great information from you there. Thank you so much, Alex, for joining me today.
Thanks for having me.
Thank you. That was Alex Lee, President of Singapore Actuarial Society. This has been The Big Story with me, Hongbin Jeong.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.